Casey's Corner, introducing you to small businesses in the East Valley. Brought to you by Prosperity North Advisors, a Kendall insurance agency, protecting your prosperity. Hello, everyone. Casey Kendall, Prosperity North Advisors, a Kendall insurance agency, protecting your prosperity. Joining me today on Casey's Corner, Kirk Deem from Directors Mortgage. Kirk, thank you for being here.
Oh, great to be here, Casey. Thank you.
I really appreciate your time, and we've gotten to know each other over the past couple months, and I really appreciate your approach and what you're doing in the community. So let's jump right in.
Okay.
Kirk, tell us a little bit about yourself. You are in the reverse mortgage industry. A lot of questions about that. I know that there's a lot of myths.
Yes.
There's a lot of truths, and then there's a lot of in-betweens.
Yes.
So I want to make sure that we cover all of those because I think it's a great product for a lot of people.
Sure.
So first, let's start off and learn more about you and what you're doing.
Okay. Well, I've been in the Valley actually over 40 years. I've been in the mortgage industry for almost 20. I started doing commercial loans, almost 20 years ago at Washington Federal. I did multifamily apartment loans.
Wow.
That market went south about a year before the residential market did, about 2008. And
Is that considered a commercial loan?
Is
The apartment loan.
Well, it's for 5 units and larger.
Okay.
It's 1 through 4 is a residential, 5 units or larger. We were looking at probably 20, 30, 40 unit buildings.
Okay.
It was certainly a commercial loan. We had the appraisal, rent rolls, the whole thing.
Sure. So after that, reverse mortgages. Sorry, I interrupted you. Please.
Oh, no. Well, I got into forward mortgages.
Okay.
After that, I actually spent some time with some of the big banks, with some of the brokerages, and had done forward mortgages for quite a few years. Over the last couple of years, and just a little from a personal side, my folks still live back in Pennsylvania.
Wow.
My mom is in the advanced stages of Alzheimer's.
Mm-hmm. I'm sorry.
Oh, thank you. I appreciate that. I appreciate that very much. But since I was really unable to do anything from here, you can send your love, you can send a check, but unfortunately, it's left to my sister to really help. In addition to caregivers, but I just felt that I needed to do more, so I started volunteering, actually for a nonprofit based in Sun Lakes called Neighbors Who Care.
Wow.
And the mission of Neighbors Who Care is to help elderly stay in their homes as long as possible. So volunteers will help them shop for groceries, take them to their doctor's appointments, their dialysis appointment, light handyman work. I've got a light bulb burned out that I can't reach, things like that.
Yeah, it's amazing that something like that could really just create dignity in staying in your home for as long as you are able to take care of yourself.
And I've seen it there, and I certainly see it on the business side that 99% of people would prefer to stay in their home as long as possible.
So extensive experience in the mortgage industry, both on the commercial side with the apartments and everything like that, but then also on a term that I haven't heard a whole lot, forward mortgages, and then reverse mortgages. So what's a forward mortgage?
Well, a forward mortgage is the traditional mortgage that people are familiar with. You look at, normally it's a 30-year loan. You can look at shorter terms. You have a principal and interest payment. Sometimes you have your taxes and insurance escrowed in it, but you can use it to purchase your home. You can refinance to pull cash out. But you're paying down the loan balance.
Got it. So that's like a conventional, an FHA, a VA loan.
Absolutely. All those traditionally forward mortgages. Absolutely.
Okay.
Yes.
Okay, very cool. So then the evolution is the reverse mortgage within the community that you're in now, and you're in Sun Lakes.
Yes, I am.
Okay. So tell us, how'd you get started in reverse mortgages?
Well, it kind of went from the Neighbors Who Care. I had thought about reverses for a while. Neighbors Who Care talked me into joining the board, so I have. But it was, I thought that I really want to be, in effect, all in for seniors.
Yeah.
And so I'm there myself, and it's just a product that's had some misinformation out there, but it helps really address some needs out there that people might not think of.
So let's talk about that a little bit. Let's talk about who qualifies for a reverse mortgage, when might be a good time to implement that, and then I'd really like to get into some myths about it and debunk those, so to speak. So tell us the basics of a reverse mortgage and how an individual or even a married couple might utilize that.
Sure. Well, most of the reverse mortgages are an FHA insured loan. That's what people are familiar with. In that case, they need to be 62, or one of the borrowers needs to be 62 years old or older to qualify.
Okay.
There are some products that are not FHA insured. They can be for age 55. It's usually for special cases and also for high dollar. If you have $1 million or $2 million home, it's something that you'd be able to look at because the limit on the FHA is $977,800. So if you have something, we talked about FHA loans. This is an FHA loan.
And an FHA loan is really, there's really no difference in it. It's mostly just government backed, correct?
Well, it is. And most people familiar with it and talk about the forward mortgage. An FHA loan, they look at the mortgage insurance premium, MIP, PMI, however you phrase it. There's an upfront premium and there's also a monthly. And on a forward mortgage, it's really looked at as a sunk cost or as an expense, because the only benefit of the insurance goes to the lender. It insures the lender against default. So most FHA loans are a very low down payment. If the market shifts, sometimes you see default, or just sometimes it's a difficult borrower to qualify.
Sure. So 62 and older, yes. There are some exceptions, government backed. Tell us the basics of the operation, meaning that as far as I know, the reverse mortgage isn't handled the same way in escrow that maybe a forward mortgage is. So you definitely want to be working with a specialist who knows what they're doing, especially through that titling process.
Absolutely. Title as well. It's important that if you have a title partner, that they are experienced with reverse mortgages, because it's a different process in terms of deeds and notes, and certainly the loan is different too, that you want to be working with a specialist.
Okay. So when an individual has a reverse mortgage, are they it essentially is paying them, right? In the simplest form?
Well, you could look at it that way. We can talk a little bit about how you can take proceeds.
I would love to learn more about that.
Yeah, it's there are, on the FHA insured loan, reverse mortgage, you can look at cash back. You can look at setting up a line of credit, which actually grows over time. And you could look at a series of payments, either over the life of your time there in the home or over a certain period of time. So you could have, just for instance, and just rounding numbers, $300 a month for the rest of your time in the home. Or you could have $500 a month for the next 10 years.
Wow.
And certainly, we'd run the numbers, but that's just a kind of an example of how it might go. The line of credit actually is based on the interest rate. The reverse mortgage is different from the forward, that instead of paying interest as you make payments, it's an optional payment, and interest will accrue to the loan itself.
So does that mean when either an individual reaches the end of their life, what happens in that type of scenario, either in a legacy type of situation, when you've got either not necessarily dependents, but parents, children involved, those types of things. What happens at the end? Is there, and this may be getting into kind of some of those myths,
yes,
so to speak. So talk to us about what happens at the end in either a death or ownership of the property after.
Well, sure. Well, the one great misunderstanding or myth about it is that the bank takes title to your home, and you basically get a check once a month, and when you die, they take title to it. And that's not the case. With that FHA insured loan, you are going to be on title through the process to the end, and your estate will then be able to take title to the home. So if the kids are worried about, mom and dad's home is going to go away, that's not the case. They will actually be able to pay off the loan balance, whatever that is, and purchase the home directly, or sell the home and take the proceeds after the loan's been paid.
In the same nature that a forward mortgage.
Very same way. Very same way. Except with one big addition is that you can have up to a year to settle with the FHA.
Okay.
6 months and 2 90-day extensions. So it's not a case where the heirs, and if it, especially if it's unforeseen, where there's still a lot of raw emotions, you don't have to have a fire sale to take care of it. You have time to work out the settlement of what you're deciding to do, whether you're going to pay it off, whether you're going to buy the home, whether you're going to sell
it. In that type of situation, is it still a good idea to have the house titled into like a trust or some type of outside protection entity?
Absolutely. It works the same way with a free and clear home or with a forward mortgage. Certainly, a trust would be a great way to go. It's not going to have any effect on how you settle the loan.
Okay. Throughout the process, Kirk, when an individual is either pursuing or thinking about a reverse mortgage, they've met the qualifications of ownership of the home, they've met the qualifications of, let's say, 62. What is their first step in getting started?
Well, and certainly we want to sit down and look and see what their goals are for themselves or for the family or their heirs going forward. And that's the first thing you want to do. But looking at the loan itself, it's not a case with forwards where you can borrow 70, 80, 90% of the amount, the value of the home. That was one of the problems many years ago with reverse mortgages.
Sure.
Here it's going to be based on the age of the youngest borrower and what they call expected interest rates, what the government thinks rates will be over time. And so they will take a factor based on that age and use that percentage of the appraised value of your home.
To average it out over the course of that
well,
time.
So it just for instance, and these change based on interest rates as they move. On a forward mortgage, when rates go up, your payment goes up.
Sure.
On a reverse mortgage, when rates go up, the amount of funds available to you goes down.
Interesting.
So just kind of today, if you're 62 years old, you'd probably be able to access about 40 or so percent
of the total value of the house.
Of the value of the house.
Now,
so that's going to have some effect on if you can do it or not. If you still if you own your home free and clear, that's great. But if you still have a forward mortgage for 30-40% value of the home, then there's not going to be really any proceeds beyond that. You're going to have to pay off your current mortgage because the reverse mortgage needs to be the first mortgage on your primary residence.
Okay, so if I understand this correctly,
Sure.
let's say you have a house worth $1 million, you owe $300,000 on that. Would that qualify?
Well, if you were, again, depending on your age, the older you are, the more you'll have access to. But if you're 60, taking that instance with $1 million home, the limit is 977.8. So you would take 40-some% of that. So you're going to have a little bit under 400,000. So there could be room there.
Okay.
And of course, you need to account for transaction costs, but you should have equity to work with there.
Okay, so somebody's met all the qualifications, they've got enough value built in the home. What is your process when you're working with your clients directly? Is it a pre-qualification process?
There is, and it's a little bit different. On a forward mortgage, people look at credit scores and look at a debt-to-income ratio if people are familiar with
Sure.
with how those loans work.
Sure.
On a reverse mortgage, since the payment is optional, we don't look at debt-to-income. We do pull credit, but we do what's called a financial assessment. And to kind of simplify it, they're looking that you have enough residual income to live in the area of the country where you live,
Mm-hmm.
and be able to pay your taxes and insurance.
Okay.
And that you've had a satisfactory payment history of those type of payments over the last 2 years. So there's cases where a couple or an individual 62 or older may not qualify for a forward mortgage, but they could qualify for a reverse.
Interesting. Okay. So once they've met all of those requirements, you've run the numbers. What is typically, is it I guess, and I'm not a mortgage person, but I guess my experience would be a 45-day escrow to close and to fund the loan. Is that what an individual is looking at?
I think so. On refinances, I certainly think we might be able to do better. But one of the things, again, you can do with a reverse mortgage is a purchase. Those could go a little bit longer.
Okay.
The FHA, in their wisdom, has kind of an algorithm where they look at an appraised value, and they can request a second appraisal. It doesn't happen much on purchases. Probably happens 15% or more on refis. So you really need to kind of be prepared for that kind of timeline that they can request a second appraisal.
So I guess that leads to my next question, which is, someone could refinance into a reverse mortgage,
Yes.
or they can purchase new into a reverse mortgage.
Well, just purchase any home. It doesn't have to be new, and it can be a single-family home. It could be an FHA-approved condominium. It could be up to a 4-unit property. So there's even a double-wide manufactured home. Don't see too many of those. Most of them are single-family, but you're not limited in property types. It's the same as the FHA forward loan of the property types you can use. So, one thing I don't see a lot of, but I think would be a great strategy, is somebody that fits that, buying a fourplex, living in one unit, renting out the rest, and not having a mortgage payment because it's a reverse mortgage. I would like to see more of it out there.
I think you read my mind, because that's exactly where I was going to go, which was, could an individual, because I've heard about this in a forward mortgage of even if it's an FHA, buy that duplex or that fourplex, live in one of the units,
Absolutely.
and then capitalize on any rent collected, and essentially you're covering yourself to be mortgage free,
Right.
based off of the rent.
Right, that's right. Well, with the reverse mortgage, again, the payment is optional. That's the nice thing about it is you were not required to make a payment.
So optional payment, however, you are accruing interest.
That's correct.
Okay, so kind of like an IRS type of thing. When the IRS tells you that you owe money, even if you're doing it, it's going to accrue interest on there. So with that being said, one of the things that caught my attention when we first started this discussion was the line of credit. Talk to us a little bit more about what that line of credit means to an individual and how that's managed.
Sure. Well, in order to do the line of credit, it is an adjustable rate loan, and adjustable rate loans have a negative connotation. You know, the payment can go up as the interest rates go up. In the case here, the interest rates are based on what they call the CMT index. It's a fairly stable treasury index, but they do move up and down based on where that index is. You brought up the line of credit. The positive of the line of credit, it grows. It's a 0.5% greater than the interest rate. So if you're looking over the lifetime, interest is accruing, but if you're not looking to make payments, actually the interest rate going up can be a benefit because the line of credit that you're established is going to grow faster when interest rates go up.
Mm-hmm.
Now, the use of the line of credit can be there's not a restriction on what you can do with it. So for a younger borrower, just turned 62, maybe has a free and clear or a small mortgage to pay off, you can establish that line of credit, not use it, and it will continue to grow over time.
Very similar to like a HELOC that a forward mortgage might offer.
Well, it's different from a HELOC in that the HELOC, one is it's normally a second mortgage. It can be a first. Some people have that.
Okay.
But in the case of a HELOC, you have a line of credit that's established by the lending institution at the time you take out the loan. Now, they may, at their discretion, give you more. They may, based on market conditions, and it happened a lot over the last couple of years, cap that or even call that. And then if you're using that line of credit for your cash flow, which people do with the HELOC sometimes.
That seems like it could be a little bit scary.
Well, it could. It could. You don't know. You're not sure what conditions are. It may never come up. With the reverse mortgage, when you sign that paperwork, your program's locked into place. Whatever that interest rate is, and whatever the growth rate or changes. Now, if the interest rates go down, your line of credit doesn't grow as fast. But if you don't touch it, it's going to grow faster than the interest accrues.
Hmm.
And so, just kind of finish that other thought on if you're younger, fairly healthy, you can set it up as kind of a backstop, as an insurance policy.
Sure.
Or you can use it if your financial plan isn't quite where your advisor thinks it should be, for long-term care insurance, things like that. If you're older, you can use that line of credit to pay for in-home health care, or just not necessarily health care, but sometimes visitation, people, companions, things of that type. So it's really they have the flexibility of the line of credit to use it for what you want to use it for. You're not restricted in the use or the timing of taking distributions. And just to make a point on the distributions, it's a loan distribution. It's not taxable income.
Okay. What's the difference in that?
Well, if you're taking something out of your IRA or your 401k,
taxable event.
It could be a taxable event, exactly.
Okay.
For a loan distribution, it's going to affect your loan balance. It's going to increase the loan balance, but as a loan distribution, it's not taxable.
I guess that leads me to the next question, which would be, if someone is in a reverse mortgage, they've got the line of credit, do they then have to make a payment towards that line of credit at any point?
They can.
Okay.
They can replenish that, and I don't want to get too far off
Absolutely.
from the advisor strategies.
Sure.
But on a forward mortgage, the interest interest on a loan is paid when it's accrued, or it can be only deductible when it's paid, I should say.
Sure.
And so on a forward mortgage, everybody gets their interest statement yearly. If your income and deductions are such, sometimes that's a write-off. Now with the standard deduction being so high, maybe it's not.
Mm-hmm.
But depending on your tax situation, you could let the interest accrue for several years, pay it all at once, and get the interest deduction on 3, 4, 5, however many years of interest. And
wow.
Ideally, if you're on the same page with your advisor, you time it when one of your investments pays off. You use that deduction to offset some of that, and it bumps your line of credit back up again.
You're extremely active in your community, and I can really appreciate that. I try to be active in my community as well. Talk to me about where you find your motivation. Where are you at right now with this journey?
Well, I talked a little bit about how I got started with my volunteering, but I think when you really look at seniors, there's a lot of seniors out there that more than you think that might need financial help. I mean, the numbers you see vary, but the latest ones I've seen, about 35% of men and about 40% of women take their Social Security starting at age 62, which is the early stage. But if you're there's quite a difference between taking it at 62, taking it at your full retirement age, whatever that may be, 65, 66 and a half it is for me, probably 67 for you.
Sure.
There's a big difference there, and there's an even bigger difference if you can wait till you're 70.
Right.
And so if you can leverage a reverse mortgage to handle some of that cash flow that you need, and not have to take Social Security, it can be a huge lifetime benefit. And so those are the people that I'm looking to help. People that are come to that point. I'm 62. Maybe I can't work anymore. Do I really need to, or can't work like I used to, depending on the physical demands of the job? How am I going to address that cash flow? Well, I have to take Social Security. Well, maybe you don't. Maybe you don't.
I could see where an individual who may be living off of a small pension. I know there's not a whole lot of pensions left out there, or retirement plans, but I think one of the largest things that is overlooked is long-term care, and the ability to, one, be able to stay in your house and afford it, at least to an extent, is extremely powerful. And in an assisted living situation, that can that become useful with a reverse mortgage, or would that be more like the sale of the house and then go into?
Well, no, you could, if you're planning and it's not an untimely event, if you have your reverse mortgage in place and you have a line of credit and you have room on it, if depending on how many borrowers, but it's assume it's a couple. If one needs to go in assisted living and one does not, if you still have room on that line of credit, you'd be able to use some of those funds to get that started. And I'm not an expert on assisted living and about the fees and
right,
and the tax ramifications and such, but as long as one of the borrowers still maintains it as a primary residence and you still have room on the line of credit, you'd be able to use some of those funds to get that started.
Very cool. Kirk, you are with Directors Mortgage. What is the best way for someone to get a hold of you if they've got questions, if they'd like to pursue a reverse mortgage, either for someone they know or a parent or heck, even themselves? What's the best way to get a hold of you?
Well, my cell phone and only phone, which is 480-720-4455. Also, if you just go to directorsmortgage.com, There's a page there for all the reverse providers, reverse loan officers. You can reach me there as well.
Awesome, awesome. Kirk, this has been extremely educational. I think that it is a good tool for somebody looking to live comfortably in a senior setting, and I can absolutely appreciate that.
Absolutely, it is a great tool. It's not just a loan; it's a tool.
Yeah, absolutely, and being able to leverage equity and live your best life that you've earned, I think, is a very powerful thing.
No, it is, and I don't think a lot of seniors don't take advantage of it, especially older. If you're from, back from the greatest generation, it's a case where you've paid off your home, and I'm going to pass on all that equity, and it's like, especially if and the kids, and we certainly want to talk to the children involved, and there's counseling involved as well. But if the kids are fine, the grandkids are fine, it's like, mom and dad, take that trip if you can, if you're still able to, or if things are tight, use it to live just a little more comfortably. Take advantage of all that hard work and all that equity you've built up over your lifetime, and use that, and certainly use it instead of your savings or investments. Use that.
Yeah. It seems like a great opportunity for somebody in that situation, especially with the way that the market is right now. I'd be curious. I'm curious to see my generation, being in my mid-40s, to see how that evolves, especially with Social Security potentially going away or not being available, or gosh, who knows, anything in between. So I think it's an amazing tool that we have right now to leverage everything that you've got, and I really appreciate you coming down and taking the time.
Absolutely, my pleasure. Thank you, Casey.
Perfect. Thank you. That's okay. Thank you, Kirk.
Absolutely.
If you'd like to be featured on Casey's Corner, please like, subscribe, share this video. Thanks very much. Have a great day.